What are some of the other risks associated with multifamily? It's kind of the hot thing right now, multifamily, and even a bunch of the residential investors that I know are like saying, "Well, I can make more in multifamily. I'm going to jump." But that sounds great, but what are the real risks? Like what are you really getting into, and what do you need to be aware of, before you go from, hey, I'm a residential fix and flip investor or a wholesaler, to all of a sudden now I want to buy, multifamily with a long-term hold, or even, flipping it or whatever. What are they really getting into?
Well, it really just depends on what their exit strategy. You always want to start with the end in mind. What is it your end goal before you go into a property? If your end goal is wanting to buy and hold for a long time, so that could be a little bit less risky if you're overpaying for a property in this marketplace. If you're an investor, like I would say 80% of our transactions that have happened from 19 to 21 that were coming from California. And remember, 90% of all our investors are actually out of state. They're not here. And they're betting on the market to, I'm going to buy this property, put a little lipstick, a paint on job on it, raise the rents a little bit, maybe rehab 30% of the units, and then I'm going to be able to exit for X amount of price. Well, that could be backfiring on them right now. And that's what I'm seeing typically actually happening right now. I do have a transaction that I will share with you guys. I actually have a podcast with Jamil about it. I think that's Pace's partner. We went in on a off-market deal last summer, and I think we went in contract around April, May, and it was a slam dunk. All the mortgage brokers were all excited. They were like basically like salivating over it. I was like, oh my gosh, this property's worth 15.5 million. And we're gonna, we got it for 12.5. It's an incredible deal. And larger deals you typically go non-refundable on. I felt like we couldn't lose based off the quotes we got from the lenders, CBRE, and other like private institutions that we're getting quotes from. And within 5 weeks, we had 5 rate hikes, and the deal became no longer financeable. And that has never happened to me out of 1,000 transactions. So going into that transaction, I tried everything I possibly could. Even going to Capital Fund was the only lender at that point that would still fund the deal. But I remember I kept the end in mind, and we're already in 450,000 plus another 30,000 in attorney fees, and then inspection fees and all those other things that were going into this property. And I said, let's look at permanent financing. I know initially we're looking at bridge financing. Let's go into permanent. Well, all the quotes out of 17 lenders, Marcus and Millichap, CBRE, Cushman, like all these different companies that were offering us rate quotes were only giving us 5,000. And I was like, guys, I went to Jim Millen Pace at the time and I said, we're going to lose this building within less than a year. I'm like, we need to cut this deal loose. And they were like, no, like it's a, like we'll close. It's okay. We'll use the write-off. I'm like, no, guys, we're going to lose this property. I'm like, we went back several times to the seller to negotiate a price of, 9 million, 7 million, $8 million. And the sellers were attorneys from Canada. They were cold as ice. And they basically told us to go pound sand. And the biggest heartbreak on that one was, like they got lenders, other brokers' opinions are like, oh yeah, the market's not going down. They went to larger institutional brokers. Sophia doesn't know what she's talking about. Like that was hard to tell my partners no. I said, guys, I care about you so much. I'm just going to give you your guys' down payment back. So I took the hit for $480,000, and it was a hard loss. But it's kind of funny is, we ended up seeing that the market, after I said no, started going really down. And then another big reason why I said no was I saw last July, we had the highest eviction rate since 2008, 5,500 evictions. So I was paying attention to all the things that the other brokers and other people weren't paying attention to. And since I'm a native and I watched my dad ever since I was a little kid and watched the patterns for the last 30, 40 years, people don't see those things that I see. So telling them no was a hard lesson, but I know we saved a lot by not losing that asset, losing our down payment. not being able to refi in a year. Other syndication groups right now are not so lucky. They are losing their assets. Those things are actually happening. And obviously, like I said, the rents is the first time here in Phoenix that have inverted for the first time in 10 years. And we went from a 4.5% vacancy to more closer to a 10, 11% vacancy. So if I would have bought that asset, just, I don't want to lose that money. I would have lost so much more, not just because of the negative cash flow. It's because the building was actually ended up being worth so much less. Jamil just called me the other day. We're still really good friends, and he'll definitely wants to invest with me again, which is great. Because I like to keep my relationships real. I've never lost a penny of anybody's money, and I never plan to. So with him, he's like, "Guess what the building just sold for?" I'm like, "How much?" He's like, 8.4 million. So
Mm.
right where I said I would trade it. And those sellers, they could have worked with us, but you know what? It's okay. I'm happy they didn't, because it was just to prove a point. Like, I'm like, even though everybody was telling me I was wrong, I knew deep down I was right, because I was had the ability to recognize those patterns. So, and then the reason why I believe I lost money on this deal is because I broke my own golden rule. And this is what I always tell my investors: do not buy master metered buildings, and do not buy majority ones and studios. Now, I broke my own rule because it was in Arcadia Light. It was like a really good location. The building was in really good shape, and there was only a little bit of more upside that we needed to do to the property. But breaking my own rule made me lose in this one.